Hi everybody and welcome to the main stage. My name is Hannah Duncan and I'm a writer. I write about FinTech, for FinTech, about FinTech. Literally my whole life is just about FinTech. And today I'm joined by two equally FinTech crazy people. First of all, we have Vesa Riihimäki, who is head of startup and growth business for Nordic Finland. Hi, Vesa.
Hi.
Hi. And we also have Anders Ostenvik, who is an investment manager at DNB Ventures. Hi, Anders.
Hi, Hannah.
Hi. How are you both doing today?
Very well.
Doing great. Thank you.
So, of course, we're here to find out how all of these fintechs can get their hands on some money. But before we do, I'd love to ask you to introduce yourselves and tell us about what you do. And at the very end, can you describe for me in just one word what it's like for fintechs in your region trying to get funding today? Firstly, to Vesa.
Yes, my name is Vesa Riihimäki and I've been in Nordea since 1989. Been doing a lot of other stuff as well, not just fintech related, of course, during that long road, but currently I think the relevant part is that I more or less founded this startup and growth unit, which is taking care of all the startup companies, growth companies, banking relations. So it's like a startup or growth customer bank, so to say. So that's what I'm heading, and that's why our CVC activities, our LP investments, and into the VC funds and so on, they all are in a way part of the picture. So that's what I'm currently driving.
And in one word, what's the journey like for fintechs today trying to get funding in the Nordics?
Well, I would say it's a roller coaster. It's always a roller coaster for startups and especially for fintechs. You know, we all large banks still haven't become that agile as startups. So the normal roller coaster plus a little bit more challenges with the large organizations that are not that agile to negotiate with.
Nice. I think that was more than one word.
Yeah, but it's a roller coaster. Yeah.
And Anders, over to you. What do you do?
Hi, Hannah. My name is Anders Ostenvik. I work in DNB Ventures. So as the name suggests, it's the corporate venture capital activity of DNB, and DNB Bank in Norway. I've been working with DNB for 10 years. Prior to that, I was with JP Morgan in London doing M&A advisory. In DNB, I've had various roles. I've worked on the lending side. I worked in markets, and the last 2 years with venture investments. So that having been several places in the bank, to some extent, I also am able to look at the funding situation for the startups from various angles, which is sometimes helpful.
Very nice.
And describing the entrepreneur's journey, funding journey in one word, I thought roller coaster was really good, Vesa. I thought of bewildering.
Okay, but very good. Okay, you were good at keeping it to one word then. Bewildering, and tell us why.
Yes. Well, I think bewildering simply because there are so many questions and factors that the startup needs to consider when they're raising capital. On what story are they raising capital? How much? From whom? What type? On which terms? At which valuation? How will this affect the next funding round, etc. And it also doesn't help that you tend to get different answers depending on who you ask. Uh-huh. So concluding on what's best for the company in any given situation can be somewhat confusing.
So bewildering and a roller coaster. Vesa, would you agree that it can be bewildering as well?
Yes, absolutely.
Yeah. And so we're here today, I guess, to try and make it a bit less bewildering. and not so scary like a roller coaster for fintechs trying to get a little bit of their money. So I have to ask you, first of all, in your experience, where do you think the majority of fintech funding actually comes from? Is it the banks or is it from private investors? Where is it? Firstly, to Anders this time.
So for I should sort of clarify that what we are looking at, the companies that we are looking at, they're typically in the seed and sort of pre-Series A stage, and so I'll comment from that perspective, and you know the perspective of the companies that we look at in this that are in this phase, because it does vary a little bit depending on which phase the company is in. So typically it will be seed money and sort of early VC money. It will be grants and loans from public institutions. In Norway, but I'm sure also other places, we have a tax deduction scheme for R&D costs. That's another way of sort of indirectly funding part of the company's costs. And then I would say lastly, a little bit unfortunately, but I do think lastly, if I'm to be honest, you know, loans from banks. Because that's more complex, because a lot of these companies don't have cash flow, and it's difficult to sort of find a product that works for that setting. But in Norway, we have a collaboration with a public entity that sort of guarantees part of the loan to a startup, which makes it easier for the banks to take on some of the risk.
And Vesa, would you agree with that? And do you have any public funding grants or similar things in Finland?
Yeah, I think the picture is more or less pretty similar compared to that what Anders explained. Then when thinking about what else could I add there is that of course we all know the global statistics and so where the money comes, private or banks or both. But I think for a single fintech company, it is relevant to understand that the specific business model of that fintech has an effect as well on of this broad range that Anders explained. That on top of that, if you are aiming to be a B2C unicorn, you know, globally in a field where the banks basically are not competing currently, or somewhere close but not direct competing, or is your fintech more, you know, RegTech type of thing that where definitely you will be selling to all large banks, or are you enhancing existing offering or for existing banks, or improving their efficiency with some kind of tools, so to say. I think that has a large, big effect on your funding opportunities and where to look for funding, I would say so. And it's good to understand that as well.
And so are there different government initiatives or schemes to help all these different kinds of fintech missions, do you think, at least in Finland?
Of course, the financing industry as such is like scoped out from some programs, but there still, of course, are tools here locally from local institutions, and but on European level as well, some EIB tools we have been using towards some fintech companies. So there are some variety in that sense as well.
Cool. So I'm going to ask you both a really juicy question now, because I think we probably have some fintechs watching who want to know, what do I need to do to get the money? So I'm going to ask you this time firstly to Vesa, what are people looking for? What do fintechs need to do to be able to access this money? What are the banks looking for?
Okay. Well, I would start from the traditional part that, whether it is a bank or VC fund or whoever is looking for investment opportunity. You always treat this area as any kind of venture area. So the team, the business model, the scalability, those traditional things that you hear from large VCs.
Better? I think we might have just lost Vesa there for 1 minute. So I'm going to head over to Anders. Anders, can you tell me, what do you think the banks are looking for, and how can fintechs get their hands on their money?
Well, I think I think if I understood Vesa correctly, as he was starting out, it doesn't differ so much between fintech and other companies active, startups active in other sectors. It won't come as a surprise, I think, to anyone if I say that the sort of first three things you look at is product market fit, and are you actually trying to solve a problem? Mm-hmm. Do we understand what problem you're trying to solve, or do we understand what type of value proposition you're trying to make to the customer? Do we believe in it? The second is the growth potential, and how the company sort of can it scale? What is the potential and how it scales? And team. Those are the three I think anyone will recognize are important factors. And then maybe I could add to that distribution, which I guess has always been there, but at least for us has become an equally important factor now when we look at and assess business models and business ideas. Is what is the distribution strategy going to be, and how well thought through is it, and how is the company thinking about that? Because you need to integrate it already from the start. Is our growing perception is that you need to really integrate into your plan, but sometimes even into your product, how you're going to distribute.
So, are you solving a problem? Is it scalable? How are you going to do it? Did I understand that correctly?
And the team.
And the team, most important. That's it. We lost you. You were talking about venture capitalists, I think, and then you went. Can you tell us the rest of what you were saying, please? Okay, we've lost Vesa again. So we will carry on without him just for a minute, but then we're going to ask him twice as many questions when he comes back. It's very important to the show. So, Anders, I have to ask you, you said then about solving problems in the market, and I guess you were talking about innovation, but you also talked about, how it's going to grow, and I kind of understood, is it going to be profitable when you said that? What is more important, innovation or profits? It's a brutal question.
Yeah, and they are sort of a little bit dependent on each other also. For us, definitely the innovation part is what will make us look at the company to begin with. So we to put it in a different way, we will not look at the company just because it's likely it's going to be able to make a profit. Mm-hmm. We will first need to be interested by what it's trying to create. And then obviously the following question, not later after, is how they I think firstly how they're going to generate revenues, and then a little bit further down how they're going to generate a profit. But sort of one thing at a time. What are they trying to solve, and how are they going to earn money? Mm-hmm. would be sort of the starting point.
And Vesa, you're back. We lost you.
Yes.
You were telling us about what people like venture capitalists are looking for when they're considering whether to give fintechs money. Can you tell us the rest of what you were going to tell us?
Yeah, I was talking about facts that, of course, we look at fintechs like any other startup. The team is important, the business model is important, and the scalability is important. But on top of that, when we are talking about fintechs, then we, of course, as well look at, whether there are regulatory limitations around that business model. how is the implementation, how easy or how is the implementation overall, you know, when connecting to for whether it is outside banks or towards banks or with banks, it's always important. Then if there is capital intensive elements, that's an important factor as well. And whether we are hitting an area where we see already existing competition, that's what we want to look at as well, how it is. And then user onboarding, how is it solved, or how can it be solved, hopefully as automatically as possible. Then the scalability part, I mean, do you need numerous partners in order to be really scalable, or do you need massive marketing investments in order to be really scalable? Those are some specific items that we definitely look at the cases when we are talking about fintechs.
Are you looking for like a complete finished fintech then that can just, it needs investment and then it just goes on its own? Or are you willing to work with fintechs to help them grow?
Well, our strategy is strictly that we are not there because of our financial purposes. It's always because of our business and customer needs. You know, whatever our customer needs, it's always a partnership deal plus a CVC investments, and it's the partnership deal is the number one, whether the offering fits to our customer base and create some new value to our customers. That's the decisive factor, and then the CVC investment comes, you know, afterwards, a part of the package, so to say.
So when I was speaking to Anders before, then you were saying, Anders, that innovation and profitability, they're interlinked. You can't really separate them that much. But that's it. It seems like you're saying that you would sort of prioritize the innovation element rather than the money side. Is that...
the money comes from our customers. You know, if we make a partnership deal and start distributing this, whatever it is, towards our corporate or household customers or so, then we assess their, you know, the profitability and income potential, but not, you know, whether this fintech is making 100 or 200 similar partnership deals with other banks, and then the company grows, and we might be looking at 10x or 20x or whatever. That's not relevant for us. It's how it supports our own strategy, so to say, towards our customers.
And Anders, did I represent you fairly then?
Well, I think what I tried to convey was that definitely we would not pursue an investment just because we think the company has a strong chance of generating profits, because that's not sort of our mandate. It sounds like our mandate is quite similar to the one Vesa is describing. It's to generate value to our customers in the end. And so from that perspective, definitely innovation first, and not just also any innovation, but an innovation that is a good fit with what the bank is otherwise trying to do. So very aligned there with Vesa. And then I would say, obviously, that's what would make us look at the company. And then afterwards, a number of other questions arise, such as how you're going to make money and to what extent can you scale, etc. I'd like to make a comment also on what Vesa was saying about the customer journey, because I recognize a lot of what he's saying in our own sort of ambition as well, in terms of fit with the bank, and at the end of the day, these investments need to generate value for our end customers, because they're the one who will be directly or indirectly paying for these services. And we look at it definitely from the same perspective. I think at least up until now, and I say up until now just because we've only been active for a couple of years with the CVC investments, we've sometimes looked at companies that we also think might generate value a little bit further down the road. So looking at them sort of today, you may not necessarily find a direct link with the business. So there's not necessarily a cooperation agreement that is entered into at the same time as we invest. But we think that there's the prospect of doing something further down the road. And so we've been sort of doing both. But I also suspect that might vary a little bit over time, to what extent one focuses on what's beneficial really short term, and to what extent one can take the liberty to look further ahead. And that will just follow the sort of the bank's general strategy and investment appetite at any point in time.
So I guess if you're a fintech watching this and you want to get noticed by big guys, then what you have to do is put the customer first, right? And do something which solves a problem in an innovative way, and you'll catch their eyes, right?
Yeah, sounds like a good plan, yes.
Cool. So I'm going to ask you a question now about what happens when a fintech grows, and then it grows, and then it keeps growing. Does it happen that fintechs kind of outgrow the Nordic region? And is that a little bit of an issue, or do you see that being an issue? Firstly, to Vesa.
Well, I think you were thinking about the funding environment in a way. I think it's not just the funding environment that you grow outside the Nordics. I think it's also in a way, the market opportunity in the Nordics is small as well. So I think it's only natural, and I hope actually that most of the companies, they have that as part of their core strategy, that they will grow. So they will be more, they will have more strength, and they will be capable of developing further even that service going forward. So I think that is something that we actually hope.
Ah, well, that's lovely. And Anders?
Yeah.
I think we definitely see for Norway that having a small local market is a lesser starting point than if you start a similar activity in the UK or France or another sort of larger European country where you have a quite significant growth potential in your local market before you need to start thinking about going abroad. So I think for Norwegian startups specifically, or any startups that feel that they are in a similar market, other smaller European countries, and there are many of those, you really need to have that awareness and build that awareness into your plans from the get-go. If you start up in Norway, or maybe like one of the Baltic countries, like with just a couple of million of inhabitants, maybe also you don't have maybe your local industry has international activity, but maybe focused within certain sectors, such as in Norway, energy, shipping, seafood are sectors where Norway plays an international role. And if you start, if you're an entrepreneur in that environment, there is a whole international network that you can leverage in terms of your growth, because there are industry networks with strong roots in Norway that will help you, that can help you out. In fintech, you don't have that. You don't have, Norway is not present internationally within fintech as such. Norway's largest bank, DNB, has some international footprint, but it's quite specific and quite limited, and mostly to the large corporate sector. So you can't really piggyback on DNB. So even if you got a partnership agreement with DNB within, to provide some kind of service, maybe white label service to DNB's end customers, you won't be able to travel with DNB to a different jurisdiction simply because we don't have the footprint there. Whereas if you're in the UK and you get a deal with HSBC, or you're in France and you get a deal with BNP Paribas, if things go well, most likely you can piggyback on them into the other jurisdictions, and that whole dynamic is not there if you're in a small market. So you need to be aware of it. You need to think about it actively. How you're going to take that into account into your plans, and sometimes even into your product. What you're actually going to deliver. And if you do that, I think then you'll find a way forward. But you need to be aware of it.
Cool, solid answer. Thank you. So we have just 5 minutes left. So I'm going to ask you to answer these questions like super quick, okay? The first one is, talking directly to any fintechs watching, what advice would you give them? Maybe like your top 2 points. Vesa.
First of all, I hear and see many times great plans and huge volumes in the far future, but I think it's number one is to be really realistic about the business opportunity and the view you build, especially in short term. And the second one is a little bit related to that, is that make your plan and communicate your plan in smaller steps, and what you need and what you will be delivering in those steps. That concreteness, I think, helps you to get forward.
Cool, good, thank you. Realistic, make a plan. Anders.
I'm going to look at it just from a funding perspective. I would say do your homework, get as much knowledge as you can, because preparation is key also for that. What types of capital do you need at different stages of development? What are the sources of capital that we discussed earlier? But have that clear in your head. Don't content yourself with literature. Talk to people in the ecosystem, companies that have raised capital, investors, public institutions. Like, have the conversations and make sure that you have a clear picture of what the possibilities are, and literally make a plan. Make a capital raising plan for sort of the next 3 to 4 years, assuming everything else goes according to plan. And in particular, the easy money that you can get, to the extent you can get some easy money in the beginning. So the public institution funds for which you need to apply. And so make sure you understand well how those application processes work, what they expect. Consider using an external consultancy for your application process, if that's if you have one of those, and they have a good success rate. So preparation and knowledge. And then secondly, timing. Bootstrap as long as you can. So friends, family, grants from public institutions. Ideally, if you can get to first revenues, first paying customer, without having raised too much seed or VC money, that would be the ideal situation for you. Then you have a very good position in terms of the future funding rounds.
Cool. Well, you guys, thank you ever so much. I think we've just about run out of time. It's been a pleasure to talk to you, and hopefully we will have a bunch more fintechs now able to access some capital because of you guys. And if you're one of those fintechs, then please do reference this chat, okay? Thank you so much, and we hope you all enjoy the rest of the day. Bye from us.
Thank you.
Bye.